Why are home buyers coming back? For the last 2 years, we've heard the same advice. Wait. Wait for mortgage rates to come down. Wait for inflation to cool. Wait for the housing market to get easier. But this month, something unexpected happened. Existing home sales just reached their highest level in 6 months, even while mortgage rates hovered near 6.5%. And that raises an important question. If rates are still high and inflation is moving in the wrong direction, why are buyers coming back? Let's break it down. This week, we received fresh inflation data. And at first glance, it wasn't encouraging. Consumer prices rose 0.5% in May alone. Compared to a year ago, inflation increased to 4.2%. Now that's the number you'll see in the headlines. And it sounds alarming. But here's where things get interesting. If we remove food and energy prices, what economists call core inflation, the picture looks very different. Core inflation rose to just 2.9%. That's still above the Federal Reserve's target, but it's much closer than the headline numbers suggest. And that's important because investors often pay more attention to core inflation than headline inflation. Why? Because energy prices can swing dramatically from month to month. And this month's increase had a major driver: gasoline. Ongoing geopolitical tensions and higher energy costs pushed fuel prices sharply higher, which means part of this inflation spike, it may be temporary. Wholesale prices also increased. The Producer Price Index, or PPI, rose 1.1% during May. And compared to last year, producer prices are now up 6.5%. Why does this matter? Because businesses often pass higher costs along to consumers. What starts at the wholesale level can eventually show up in the prices we all pay, which is one reason inflation remains such a concern. Now, attention turns to next week's Federal Reserve meeting. And this one matters. Not only because inflation remains elevated, but because it will be one of the first major meetings under the new Fed chair, Kevin Warsh. The Fed has a difficult balancing act. On one side, inflation remains above the target. On the other, the labor market may be slowing down. New unemployment claims have increased for 3 straight weeks, and continuing unemployment claims, they remain elevated, which suggests some workers are taking longer to find new jobs. The Fed wants inflation lower, but it also wants a healthy labor market. And right now, those goals, they just aren't perfectly aligned. And that's why investors will be listening closely for clues about the future interest rates. Now let's talk about the number that caught many people off guard. Existing home sales increased 3.2% in May. That pushed sales to an annual pace of 4.17 million homes, the strongest reading we've seen since December. Think about that. Mortgage rates are still near 6.5%. Affordability remains a challenge, yet buyers are entering the market anyway. Why? Because life doesn't stop for mortgage rates. People get married, families grow, military members receive new orders, children start school, and jobs change. And those life events often matter more than trying to perfectly time the market. There's another statistic hidden in the report that deserves attention. 35% of all home purchases were made by first-time homebuyers. 35%. That's a strong reminder that many buyers aren't waiting for the perfect conditions. They're finding ways to move forward, despite uncertainty, because they understand something important. Perfect market conditions, they rarely exist. There was more good news for buyers. Housing inventory increased to approximately 1.5 million homes. That's significant. More inventory means more choices, more negotiating opportunities, and less of the intense competition buyers experienced during the pandemic housing boom. We still aren't in a fully balanced market yet, but conditions continue to improve. And that's welcoming news for buyers who felt frustrated over the past few years. Here in Hampton Roads, we're seeing similar trends. Inventory levels continue to improve across Chesapeake, Virginia Beach, Norfolk, and Portsmouth. Median home prices, they remain relatively stable, and buyers are beginning to see more options come onto the market. That's creating a healthier environment than we've seen in recent years. The biggest takeaway from this week's data isn't that inflation rose, and it isn't that home sales increased. It's that the market is adapting. Buyers are adapting. Sellers are adapting. Lenders are adapting. The people succeeding in today's market aren't waiting for perfect conditions. They're making informed decisions based on their finances, their goals, and their long-term plans. Because while nobody knows exactly where rates will go next month, successful homeownership has always been about the long game. Next week's Federal Reserve meeting could give us important clues about where inflation, interest rates, and mortgage rates may be headed. We'll be watching closely. So if you're thinking about buying a home, refinancing, or simply wanting to help understand your options, I'm always here to help. And if you enjoy market updates that actually explain the headlines, make sure you subscribe. Because next week's update could have a major impact on the mortgage market.